Now, across my 7-figure dividend portfolio that pays me on average $8,400–$8,500 per month in dividends, I own several different stocks and, of course, different ETFs and covered call ETFs to be specific. Now, I like covered call ETFs because they basically utilize one of my favorite trading strategies, selling covered calls on a high quality underlying basket of holdings or an index in order to generate a ton of income consistently. Now, even though I own tons of different covered call ETFs in my long-term portfolio, if I for whatever reason could only hold on to one, there's a specific one I would choose in a heartbeat. So in this video, we're going to talk about that covered call ETF that I would choose to buy into if for some reason, which isn't the case, but if for some reason I could only purchase one. I'm going to share with you guys what's special about this covered call ETF and why I like it so much, and even how many shares I have of it as of right now and how much it pays me every single month and every single year. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, some of you guys probably already guessed it, but the covered call ETF I would choose to buy into to hold on to, if I could only buy into one for some reason, would easily be the S&P 500 High Income ETF, or ticker symbol SPYI. Now, I do want to do a quick overview of this ETF and share with you guys how it works right from the website, but just before that, I want to share with you guys some of the main reasons I like this ETF in particular. Now, I made a really quick little list here. First of all, it offers exposure to the market, quote unquote. It offers S&P 500 exposure, which of course you could argue NASDAQ 100 exposure might even be better, which I also have a ton of that in my portfolio. But the S&P 500 is tried and true, and I personally love having exposure to it in my portfolio, especially through a high income strategy. Now, next, the ETF has around a 12.5% yield, which means you don't even need to invest all that much money consistently in order to really raise your total monthly and total yearly dividends consistently, which is what I've been doing over the past several months. Now, next, it offers monthly dividends, which is also important to me because sometime in the future, I do want to use some of my dividends to pay for things like bills, monthly expenses. So monthly dividends, although not necessarily crucial, I love SHD, which pays out quarterly, but monthly dividends are sort of a bonus. Along with that, this ETF has not had any NAV decay. We all know about the high income or even ultra high income ETFs across the market that offer tons of income, but their charts go down and down and down over time. This ETF has been very stable, basically traded sideways since inception, and has offered us investors anywhere from 12 to 14% yield. Now, as if this already isn't enough to at least potentially look into this ETF, it also offers a ton of income in the form of return of capital, which is very tax friendly, depending on your situation. Now, this ETF also does have upside potential. This ETF uses a part of the option premium to actually buy SPX index options. So if in a short time frame, let's say the SPY goes crazy, this ETF, even though it's a high income ETF, could actually participate in some of the upside potential. Now, the last few reasons I love this ETF personally is because of the consistent income. It pays around 50 cents per share per month. At least it's what it's done since inception, and it offers a nice solid green total return, which I'll share with you guys here in a second also. Now, sure, are there ETFs across the market that might offer some of this and maybe most of it? Sure, but this ETF offers every single thing on this list and more, which makes it my personal favorite if we're talking high income ETFs. Now, if you guys might be curious on how many shares of it I personally own right now, I currently have around 1250 shares of this one, which I've been buying now for several months, and I'm still adding more on red days. And if this ETF pays, let's say 50 cents per share per month, I'm looking at around $600 per month in dividends, which I then can reinvest into more shares of this one or anything else across the market. Now, my longer term goal would be to get to 2,000 shares of SPYI and also actually QQQI, and then at that point be earning around $1,000 from each of them every single month. Now, if you guys are still watching to this point in the video, make sure to drop a like down below and subscribe to my channel because I only talk about dividend income oriented content on this channel. But now I'll just sort of get a behind the scenes look into how this ETF actually works, how it actually generates so much income, etc. It says right here, the NEOS S&P 500 High Income ETF seeks to generate high monthly income in a tax efficient manner with the potential for equity appreciation in rising markets. Now, I've said this before and I'll say it again, if you're looking for an ETF that offers a boatload of income, or on the other side, if you're looking for an ETF that offers a boatload of growth. There really is an ETF out there that seeks anything these days. There's so many products that come out every single week at this point, it's hard to keep up with. But because this ETF actually offers or seeks to offer exactly what I'm looking for in my long-term portfolio, that doesn't mean that you guys are. That means that what I'm looking for is consistent high income, is also a tax-efficient investment, but then also on top of that, some potential for some appreciation. Now, the way this ETF works, first off, high monthly income generation. SPYI aims to generate high monthly income by investing in the constituents of the S&P 500 index and then implementing a data-driven call option strategy. Next up, this ETF offers tax efficiency. SPYI utilizes SPX index options classified as Section 1256 contracts, which are 60% long-term, 40% short-term, and the fund managers may seek to take advantage of tax loss harvesting opportunities. Now, more as of recently, it seems like a lot of these high-income ETFs are sort of aiming to offer more of a tax-efficient strategy for us investors, which is awesome because high income potential is great, but if you're paying a ton of taxes on that high income, it sort of becomes a bit unnecessary. Now, lastly, upside potential. This is also a great strategy in this ETF. This ETF aims to capture a portion of the S&P's upside when the index rises. And like I said, this is because at times this ETF could actually buy into SPX index options. Now, I mentioned the distributions, at least for the most part, are around 50 cents per share per month. In the last year or so, there have been a few that are a little bit over that and under that, but this ETF targets somewhere in that range. Now, I also mentioned that this ETF offers a nice green positive total return. Since inception of the ETF, it's offered a 41.08% total return, where the SPY has actually, during the same time frame, offered on a 53-54% total return, so it has outperformed SPYI, but not by all that much. You see, when you're buying into high income ETFs that, let's say, buy into the S&P 500, then utilize a call option strategy, you can't really expect it to necessarily outperform or even perform as well as the underlying because the upside is going to be capped. But by doing so, the ETF is going to offer a ton of income generation. So for me, at least when it comes to my higher income investments, even if they trade somewhat along with the underlying, the SPY, and offer me a ton of income generation the entire way, I'm personally happy with that. Now, would I be even happier if this ETF, let's say, offered a 47 or a 49% total return, where the SPY offered a 55% total return? I'd be a little bit happier, but still the performance has not been bad whatsoever. It's relatively low beta and is offering me and my portfolio a boatload of income every single month. Like you guys saw as of recent, around $600 per month. So even though in my long-term portfolio, I would never only invest into one covered call ETF just because there's so many great strategies, so many great fund managers, and so many great products these days across the market. If I were, for whatever reason, only able to buy into one, it would simply be the NEO's S&P 500 High Income ETF just because of what it has to offer, the underlying S&P 500, and everything else we talked about. But before I go, I do have a question for you guys down below. If you for some reason could only invest into one single covered call ETF across the entire market, which one would it be and why? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.